Hey guys, welcome back, welcome back, welcome back. It's good that you're back. We're feeling good today. God is good. Yes. Now, I don't know if you guys remember, but if you go back in the history in my YouTube videos, right? I did an analysis on the Eurozar, the monthly time frame. So whenever you guys have a chance, go back to that video and look and listen to what I had to say, right? Pertaining to that particular currency pair. All right. Now that I said that, right? However, at the time of that analysis, the market was going down on the daily, but the monthly showed bullish momentum, but the daily was showing bearish momentum. Now, I can give you guys a heads up, okay? The monthly time frame is very, very, very powerful. Very, 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 very powerful. The banks, they trade off of the monthly and stuff like that. The banks and the hedge fund managers, they trade off the monthly and the weekly. Like they have because they have that long-term slow money growth over a period of time. The retail traders, persons who ain't got, the average person, they got a couple of dollars, maybe 100, 200, $300 to start an account with, maybe they may have 3 grand. You can't compare yourself to the banks. But anyway, that's another subject to another day, the banks. However, because of course, you have retail there who's got millions of dollars, but still there is no comparison to the liquidity factor between the banks and the retailers in terms of retail traders. Anyhow, that being said, I saw on the monthly time frame, that the market was going up. I made mention of that, right? That the market is going up on the monthly time frame, right? It was the same candle. Remember, I had I showed you the ascending channel where the market was going from resistance to support, but it was going up and down between these two, trend lines. It's a channel, all right? It's an ascending channel. And of course, there was this double top and then the market. See, when this double top happened on the monthly, very powerful, very, very powerful. The market then continued its descent until it actually came down and touched this trend line, broke, and of course the buyers pushed the market back up because and then it actually respected. That's already in my old video, right? Now, this is the thing. I saw this. So the right thing to do as a trader, because me, I like to trade long term. Sometimes I do day trading, a little scalping once in a while, but more so day trading and swing trading. That's what I like to do because I like to look at the market from a long-term perspective, right? Now, looking at this market, I said, you know what? Seeing that the market is going up, but this month's candle at the time was a bit lower. It was a bit lower. I said, what if I take up my Fibonacci retracement tool, right? And I scaled it down. I did scale down to, a particular time frame and I drew my Fibonacci and I waited. I waited, all right? And I can tell you where I went. This ain't no secret because I don't want it's like it's sharing a secret. I did drew my Fibonacci from this last swing high. Sorry, sorry, not last swing high. Sorry, I drew my off the daily. I drew my Fibonacci from the last swing low to the actual swing high because the direction of the trend is going up on the monthly. So I drew my Fibonacci and I came to the conclusion based off the Fibonacci and the golden zone that it actually produced. I said, okay, the market It's going to probably retrace. I'm going to draw my rectangle in this particular area. And what I did after drawing my rectangle in that particular area, I said, I'm going to wait to see what price is going to do when it hits that particular area after drawing my Fibonacci. All right. Now, when I drew my Fibonacci and I drew my box, I removed my Fibonacci, right? And of course, I scaled down even lower just to see what the market was going to do inside that box. I'm spitting some powerful stuff here, y'all. It's very, very powerful. The average trader wouldn't tell you this, or they might want you to pay plenty money to them to tell you all this. But I speak it in course because I don't want to give over everything in this video. All right. But that's what I did. And I saw that it actually respected, all right, that there was a candle confirmation because I saw that the bears ran out of steam. Because remember, overall, the market is going up off of the monthly. All right. Now you see this box right here? You see this rectangle right there? This is exactly where my Fibonacci golden area landed me after drawing my Fibonacci from the swing low to the swing high. And I scaled down and I made my entry because I got into this trade. And this candle produced, this was the candle that it produced yesterday. So I said, you know what? More than likely, the market going up, you know. And see the conservative trader, of course, they will put their take profit right there. If you're doing that long-term couple-day trade, you're going to put you, because this is the previous swing high. So there might be a consensus on your part that the market will continue past this level and go higher. But conservatively, right here. Now, interesting enough, I don't know if some type of news event happened today. I don't know. I don't know. But all I know is that the buyers got very excited. The buyers got very, very excited. And the current time is 3:51 p.m., right? So within the hour, within the 3 o'clock hour on today's date being the 5th of August, 2021, the buyers got very excited. We're talking about the banks, hedge fund managers. They shot the market all the way up here. You see where this long wick is? This long wick? I was already in this trade from here. I was right here. I was in here from yesterday because I perceived, and as a matter of fact, I actually had a position, believe it or not, all the way down here. But that position I closed out yesterday because I got some pips off of that one. But then because then because you never could tell what the market will do as it relates to the long-term move if you're trading off of the daily, if you actually don't wait until that daily session is closed. So for safety, I say, let me get out with my couple of pips, right? I say I can get out. Now, when I saw the market close like this, I said, interesting. So what I did, I got in right there. And the market shot all the way up. And when I saw this, and the market was way, way up there, I said, what? I can take my money. So I actually exited the trade, you know. But I'm just telling you something. I caught this move right here where the market was way up there. I caught it. And I'd retraced a little bit because I had my eyes off of the chart and I was watching something else. So the market was like right there when I actually saw the candle. I was like, whoa. So I just decided to close. But what I'm telling you guys, if you pay attention and if you start analyzing the market, and I'm not saying that I'm this professional guru or I off the chain and I'm the best trader in the world. No, I just know that my mentor, he would always say, you analyze the market from the higher time frame perspective because you have a better overall view to what the market is doing and where it can potentially go. Thus, that's how I look at the market. I look at the market from the highest time. I go to the monthly, then the weekly, and then the daily, because the monthly time frame is the most powerful time frame that you could analyze from. And then you make your entry. Now it depends on the type of trader you are too. But then, like I say, if you trade, if you use the daily candle to trade off of, you gotta analyze higher. Because if you're trading off the daily, you don't analyze from the daily. You analyze higher, weekly, monthly. I like to go from month, top down analysis, month, week, daily. But then when I make my entry, I scale lower than the daily. I don't enter off the daily. I scale lower, much lower. Not much, but lower. And this is how you get good, precise entries, more high probable entries with minimal drawdown. Like, yeah, this particular video is a very powerful one. If you guys could read between the lines and understand what I'm saying, it's very, very powerful. You saw my video. I know I'm ranting and I'm talking kind of long here. I'm a talker by nature, so forgive me. That's just how I just like to talk. That's just me, but I like to talk sense. I like to talk and say things that will educate and help people. All right. I'm not gonna talk foolishness. I'm gonna talk things that's sensible. But if you look at my last video pertaining to the Eurozar, I told you guys that the market was trending up. So what you do as a trader who understands that or who understands market direction, you then scale down and you wait for the market to retreat. Allow the market to come to you. All right? Allow the market to come to you. Do not chase the market because the market will humble you. Trust me, if you don't know what you're doing. I drew the same rectangle and I said, you know what? I will allow the market to come to me. I was watching this pair like a hawk for days. Because once I saw the descent start to occur, I took out my Fibonacci. All right? Retracement tool. And mind you, you don't need Fibonacci, but Fibonacci is a very, it's a nice tool to use as a part of your trading arsenal to help you get precise entries because you don't just use Fibonacci, you use Fibonacci with price action, with market structure to help you get, it's a good help. All right. So that's the end of my video. As you can see, the euros are based off of this move today alone. Now, mind you, the market could come down. Don't get me wrong, because the market could do anything. It could form what you would call a head and shoulders pattern and drop all the way back down, right? It could do that. But I'm just looking at the market, this move here. I'll say this last person, this last piece here. Anybody who is trading this particular pair, let's say those persons with large accounts, you understand, who trading $100 per pip and stuff like that, those persons trading with $200 per pip, $500 per pip. Let me put it this way: plenty people smiling right now. All right, you guys have a wonderful day, and feel free to comment and subscribe and hit the notification bell and give your boy a thumbs up, please. Please, 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 for the YouTube algorithm. I would greatly appreciate it. So you guys have a wonderful, wonderful, blessed, and prosperous day. God bless. Take care.